U.S. bankruptcy filings continue to drop, but experts warn that trend may not continue into next year. Christina Partsinevelos is here to run through why that is. Hi, Christina.
Hi. So you mentioned U.S. bankruptcies. They actually fell in November, and despite Chapter 11 filings from a company like Revlon to BlockFi, 2022 is still on pace to have the lowest number of filings in over a decade. But don't be fooled by this number. This doesn't mean that all U.S. firms are on good footing. Bankruptcy filings tend to trail off towards the year end because of seasonality. But U.S. firms have been buoyed by over these past few years by unprecedented low interest rates and government aid. Experts say those support systems are now gone.
There is a common element of the cost of debt is up and economic conditions are worsening. And that is bound to lead to an increase in the number of defaults.
Speaking of defaults, Moody's Analytics predicts the global default rate, then that's pretty much the percentage of loans written off as not paid, will double to almost 5% next year. And that's what you're seeing on the right-hand side of your screen. Another warning, though, for U.S. firms in 2023 is credit downgrades actually outpaced upgrades just last month. You can see just on the far right of your screen all of that red down there, signaling more companies are not currently solvent enough to readily repay their debts. Several environmental factors are at play.
Obviously, what people are calling the crypto winter is one. Changes in commuting patterns and occupancies of downtown, which is impacting the commercial real estate market. That's certainly something that a lot of us expect to lead to restructuring activity in 2023.
A lot of our viewers want to know, how do you make money off of this? It's tough to get into the distressed debt market if you're not a hedge fund, but investors can get into high-yield corporate bond ETFs like JNK and HYG that you're seeing on your screen right now. Those are examples, and they offer higher yields because of higher risk of defaults. And you can see just over the last 3 months or so, all of those are at least about 1% higher or so. Guys?
So just to be clear, Christina, what we're talking about here is largely Chapter 11. We're talking about debt restructuring when we're talking about an increase in bankruptcies looking to 2023.
Precisely all of that. And of course, you can get creative with restructuring, and we may see a lot of that in the new year, often within industrials and consumer discretionary companies. But just over the last decade or so, Chapter 11 filings, I mentioned BlockFi, Revlon as examples, it's not the end all, right? It's a way different process. The CEOs usually don't get fired right away. You bring in Chapter 11 experts on the boards, and they start to restructure. So we may start to see a lot of that in the first half of next year.
We might. Absolutely. It's time in the cycle to expect that. Christina, thank you very much.
Thanks.